Okay, it is Wednesday, February 21st, 2018. I'm watching this thing hit the 80 target there. It's about 10 minutes after 10 a.m. New York time, and this is a trade that we just took, opened and closed. This net, if you held it from the entry to the final target right here at 39.80, this resulted in approximately 60 pips profit. I did give two targets, so I provided two targets here. The first one here was at 50, and the second target here is at 80. Now, I want to review what I was doing here. So again, this went through the email trade alerts. If you did not get this trade, just go back in and look at the email trade alerts. Maybe you ignored it or whatever, but it was an email trade alert that's sent to everybody that's on the email trade alert list. So this is the pound dollar 1 hour time frame, and I was trading a bounce off of this support range here. So the question earlier from a coaching student was there was a signal, it looked like a signal to maybe perhaps sell it. And while it might go lower after this retracement here, this type of a reaction, especially during the New York session, is somewhat common. Now, when I say that, I don't mean that it happens every day, because it doesn't happen every day. But when the conditions are optimum for this type of trade, then generally it will happen right around times like this where there's more participation, there's more volume. So it is a trading session that has, more activity. There's sometimes economic data, people are speculating, there's rumors, posts, people are more active, blogs, people are posting brand new articles for the day. There's just a lot more activity. You can sort of understand what I'm talking about why one particular session would have a little more activity than another. And that, again, that doesn't happen all the time. And even when there's a lot of activity, sometimes it's still not enough data for the market collectively to have a decision made as to which direction to trade it in. So clearly this morning it looked like it was going to provide this kind of opportunity. So from the entry to the final target, this resulted in approximately 60 pips. You have a couple of choices when you take my trade alerts. You can either scale out at the first target and then let the second half of the trade run to the second target, or just trade it from the first target to the final target. I'm sorry, from the entry to the final target. As long as you're going to protect yourself, because sometimes they may not hit that second target. They just might hit the first target, and you have to be prepared for that. If you're just going to use one target only, and you can't close a portion of your trade, or you don't want to put on maybe a minimum of two lots when you open the trade. However you want to do that, that's fine. But I just provide you these two opportunities, these two targets, to make sure that you lock in trade profits, because this still resulted in about 30 pips from the first target. And in a situation like that, if that's all it does, there's no reason to give that money back. It's a relatively short trade. You can see that these are 1 hour candles. It's about an hour's worth of work or so. So why give that back? If you're trading standard lots, that's maybe $300 approximately. Why give that up? And if you're trading 5 standard lots, you're making decent money. There's no reason to give that money back. So but today there really wasn't anything to worry about. You could see that when this candle closed, it was probably going to continue. Very often these wicks like this, to me, the way I look at them, as long as the trend and everything is working in my favor, there's today's pivot point. It looks like it's just pointing right in the same direction. It's just going to continue with some follow through. This was a bounce. This was a Tech 1 trade. I did get in a little bit earlier than the 1 hour provided the opportunity. I sent out that message and then I got into the trade earlier. So I'll talk about that and I'll post it in the membership area in for coaching students too, about what technique it was and how I used it, what the indicators were doing, how I was able to determine that this was going to be a strong bounce, because in some of the other currencies, you're not seeing a strong bounce at the same time. You might see some movement now after the fact with some of the other currencies, but this one, I could see it happening right away. So again, I'll talk about that and we'll dissect the entire trade so that you can maybe apply it, learn to apply it on your own. I would be very, very careful. Again, I'm going to caution you with some of these trades that I'm using strategies that I've executed and used this trade and this technique. The first technique that I developed was a continuation breakout trade. The next one that I developed was the Tech 1 trade. They were right about the same time. I could see the pattern. And with the continuation breakout trade, I could see a second entry opportunity, which was the Tech One trade, the Tech One trade setup. In this case, I was also watching the 30-minute chart, not just the 1 hour chart, to get into this trade, and using a specific indicator that will help me identify that I'm looking at a bounce rather than a closed completed candle below support where I would expect price to continue to go lower. So there was a big difference there. And then we also look at the larger time frames, because if I'm going to trade a continuation breakout trade to the downside, let's say that this was a signal candle and it closed below support, because you've got two conflicting signals there, right? You don't know if you should sell it or you don't know if it's going to bounce. What helps you decide that? And again, whenever I see a signal, it doesn't matter if it's a bounce like this or a continuation signal candle to possibly sell it, I'm going to stop and I'm going to ask myself, has there been any other prior continuation breakout trades in this downward direction? So in other words, when this signal set up and looked like this, that one right there, you're thinking to yourself, is this going to continue to go lower? Is this breaking out below support from yesterday? What's happening here? But you can go back over here to the left and you can see a few other continuation breakout trades that have been in this direction. What happens is that eventually you're going to see a continuation signal candle and a breakout on the 1 hour time frame that develops at the end of a trending move. And sometimes the only way to see that, you can't really determine that here with the information that we have on this 1 hour chart. Even if I was to compress things by clicking it once and tighten things up, you're still going to only get so much data. And when you start looking at the 4 hour and you start looking at the daily charts, things start to make much more sense. You can find specific support levels where price might turn around and bounce. And then looking at the 30-minute chart, the way I was looking for that setup, I could see that bounce developing here. So it made no sense to try to sell it. It was obviously going to be a bounce, and a significant bounce, because even with the entry at 20 and a take profit level here at 80, that's 60 pips. That's still a pretty big move relative to this time frame, relative to what we're doing. We're day trading, we're intraday trading. So again, I don't get these setups every day. I'm very careful about the setups. There are some, when I see them set up, things don't look right, so I just pass on it. I leave it alone. I don't mess around with it. If things don't line up and I'm not comfortable with it, I step away. Now, that is not an easy thing to do because I tried to do that in the beginning. When things didn't make any sense to me and things didn't line up in the beginning of my trading career, and I could sort of see some confirmation, but I was struggling with, and I was thinking to myself, is this really a trade or is it not? What should I do? When I thought that way and I was in that situation and then I went ahead and executed the trade anyway, very often in almost every situation, it would be a failed trade. And then I had nobody to blame but myself because I was executing trades that I didn't understand. You don't want to take your money, real money, and then test something like that. It's better for you to just sit it out and then watch and observe and learn the behavior and then keep doing that over and over and over again. Now, obviously that's going to take weeks, months, years, depending on how much time you can trade every day to get that kind of experience, so that when you see that happen and you get into that experience, that moment where you're thinking to yourself, I'm not too sure, what should I do here? It doesn't look right, doesn't look, something's wrong. To gain that strength, that personal strength to be able to stop, that's going to happen by constant exposure to that event, that situation where you're testing yourself and you're forcing yourself. Yes, you're going to make mistakes, and you need to experience the pain of that mistake to help you stop making that mistake. And again, the more often you go through that, the more likely it is, and the sooner that it's going to happen, that you have that personal strength to be able to say, hey, something doesn't look right here. I'm done. I'm walking away. I'm going to take my hands off the mouse and I'm just going to sit and watch. Because you're going to obviously save money. You're not going to lose money by sitting and watching. Yes, it's true that it could turn out to be a winning trade anyway, but if you don't understand it, what difference does it make? You want to be able to understand it. That's the whole key. You're here to make money, and you need to be, of course, right, but get your ego out of the way. You want to learn and observe when these trades and how these patterns and how the market reacts to these things. Try to find out why price is moving here. Try to find out why it's bouncing, and take that time while it's moving. Take that time to investigate, and it's a learning experience that all puts together this perfect trader that is constantly looking for these opportunities that are more balanced in your favor at any given time that you execute a trade. That's all you're looking for. You don't want to take a trade where the odds are more against you And that's the key to the whole thing is to create that kind of environment. Part of it is just by simply making the decision to get into a trade or not, ones that you understand. You want to execute the trades that you understand, stay away from the other ones, and just watch. I know how hard it is if you've got to make money every day. You're trying to earn back losses, or your family's counting on you, or you're trying to send home money to pay bills. But I'm telling you that if you put yourself under that pressure and you're executing trades you don't understand anyway, even though you have that kind of pressure where you got to make payments in 30 days and your family's waiting for you, you're still not going to get there. You're going to end up losing money and you're still not going to get there anyway. So you'll last longer. You might be late on these payments or whatever it is that you're trying to do, but it's better because you're going to have the capital and the money to succeed and continue in this business if you do it that way. I know I did it the hard way. I mean, I blew up 2 big trading accounts in a big way, and it was bad. I don't recommend anybody doing that, but I learned a hell of a lot from doing that, and I fought my way back because it was so painful. It was I think a lot of people would either just walk away at that point, but I had lost so much there was no way to walk away from it, and it can be done. So anyway, thanks for your time. Those of you who executed the trade based on these signals, when I send out these signals, I specifically tell you which currency pair I'm trading, the time frame that I'm trading off of, so that you know more or less what I'm doing. And then I also put a timestamp on there, and then the entry, the take profit levels, and then the stop loss. The stop loss was really small on this one. It was just down here underneath that price swing low. I believe it was like that 98, 1.3898. So it was a really small stop versus the total reward here. At this point, I'm done with the trade, and even if it goes up a little bit higher, you can trail it a little bit further, but I don't think it's going to go a whole lot higher. And we'll take a look at the other currencies in the next update.